Are you somebody that's looking to refinance or buy a home and you're wondering, why are the interest rates that I'm getting from one lender different from another? What are some hidden fees that maybe I'm going to be charged? And what should I know about the process? So in today's episode here, I want to bring your attention over to the Talk of Connecticut radio show that I did a couple weeks back. And I actually discussed some particulars about a concept I call advice over price. Go ahead and take a look. Recently, I had a client come to me that had seen in the newspaper a 1.75% mortgage rate and called me and said, wait a second, Rob, you were giving me, something in the twos. How can they get this 1.75? And they were absolutely convinced that this was a real rate. So they went through the process of applying for that loan, and lo and behold, that 1.75 rate cost 4 points in fees to get. A point is equal to 1% of the mortgage amount. If you do the math on this, was a $400,000 loan, 400,000, 1% is 4,000. So 4 points, that's $16,000 that they were going to have to pay to get this 1.75% rate. So they thought it was great on the surface, but then when they got down to the reality of it, how were they able to get such a low rate? Why were they able to get a rate that's lower than the market? And it really, almost always, it comes down to these hidden fees, in this case, these 4 points. So we determined it was actually going to take them 25 years to break even by paying those fees versus just taking the 2.25% rate that I was offering them at the time was actually a better deal with no points. So that's just one example hitting you straight.
That's deceitful.
It is, but this is the norm in today's mortgage market. I mean, this is happening every single day. You see the billboards, you hear the radio advertisements, you see the things on TV. Even when you walk into your bank, they have something showing, here's today's rate. They don't give you all the details. And especially a lot of the mortgage companies that advertise through direct mail or using call centers, they're really focused on just getting you to call in to get that lowest rate. Another one that I'll tell you that illustrates this well is I had a client come to me a few months ago, and they had found me online, actually had watched some videos on my YouTube channel and reached out and said, Rob, I am in the process of refinancing. I just started the process and I'm getting a great rate, but I just don't feel right about it. There's something wrong. I feel like the fees maybe were a little bit off. It just, something didn't sit right with them on this loan. So they sent me over their loan estimate they got from their loan officer, which details all the fees. And we sat down and we reviewed it and found out they were getting offered an FHA loan, which an FHA loan is sometimes a great loan. A lot of the time it's a great loan. But in this case, they were giving her this FHA loan that had all these additional fees and costs. And when I looked at it, the reason they were giving her that loan is because she had a late payment on her mortgage the previous year during COVID. And that was the only loan she'd qualify for. Well, I determined that if she just waited one more week till the turnover of the next month, her late payment would be 12 months old at that point, and she'd qualify for a conventional mortgage. So I said to her, stop what you're doing. Do not move forward with that loan. She had an appraisal scheduled. I said, cancel that appraisal. Do not move forward. Next week, I'm going to go ahead and move forward on my end and see if I can get you approved for a conventional loan because you should qualify based on the information that I have. Lo and behold, that's exactly what happened. I ran her credit on the first of the month, and it came back with a very similar credit score, but that mortgage late had now been seasoned over a year. Now I ran it through the automated underwriting system. Boom, she was actually approved for a conventional mortgage. It didn't have all those extra fees. The rate was slightly higher, but it was actually saving her more money because it didn't have all those extra fees. So another scenario where you can see price is not the most important. It's the advice, it's the program, it's the plan. So everyone out there is taught, let's ask, how do I find the best loan at the lowest rate? That's what is being taught by the banks for you as a consumer, as a future home buyer or homeowner, to be asking your lender, where can I get the lowest rate? I want the best loan at the lowest rate. Wrong question. Hope that helped you and gave some great insight into why advice is much more important than price when it comes down to getting your next mortgage loan. If it's your first time on the channel, please go ahead and hit subscribe. Also click the bell so you get notified on all of our future content. On this channel, we empower people to take control of their futures through expert mortgage and financial strategies. If you'd like my help personally, I'm licensed in Connecticut, Massachusetts, and Florida, and you can reach me by private message or call or text my office, 860-413-3938. Again, hope that helps, and we'll talk to you soon.